We are so glad you could join us today on a Monday. I'm Marlon Bowling with you, along with Brian Hoops of Midwest Market Solutions. He's based out of Springfield, Missouri. Brian, I wanted to ask you about this wheat market here. It seems like it's having trouble getting much traction, and it just cannot get away from these long-term lows on the wheat charts. How are conditions in the Southern Plains from the folks that you've had a chance to talk with firsthand here?
You know, wheat's not doing so bad that's been planted. The question will be is how much of that wheat actually got planted in decent conditions. Informa came out on Friday and said that wheat planting numbers expect to be about 1 million less than what the USDA had thought. That coincides with what we had heard from producers as well. They had intentions in early September of planting more wheat acres because of price levels, but since that time, prices have fallen substantially, and going into the fall seeding time frame, the conditions really got pretty poor because of too wet, too cold conditions, and they may not have followed through with all those planting numbers. Wheat is struggling, as our inspections indicated, marking year low on inspection numbers. Anytime we rally off of our lows, we just become too uncompetitively priced in the worldwide markets. We have to stay fairly cheap near that $5 and below level if we're going to see any type of demand for our wheat products.
Let's take a look at our current trades in Chicago. We start with the corn and soybeans, and we'll get into the wheat here in a second. On the corn right now, still 1 1/4 penny lower. We're now showing a last trade of 381 3/4. That would be matching our low of the day. And now July down 1 penny. We're at 397 1/4. On the soybean trade, you know, we opened up several cents higher, and it gave back about 2/3 of that so far. We have the March now up 1.5 pennies at 9.23 per bushel. And we have the July contract 1.5 pennies higher at 9.47 1/2. And moving on to the wheat market in Chicago wheat, we have that March contract 3 lower at 5.14, July down 3 3/4. Excuse me, in the hard red winter wheat market on the Kansas City wheat, you have the March contract down there 5 1/4 lower now at $5.75. It's just hanging on to $5 by its little fingernails. And you have the July contract on KC wheat down a nickel at 5.23, just one tick from its low of the day on each of those. And in Minneapolis wheat right now, you have the March contract down 3 1/2. We're at 5.66 3/4. Meanwhile, July is down 3 1/2 at 5.78 1/4. So it's off its earlier high there by about 4 cents or so. If you look at the cotton market so far today, you have the March contract now 37 points higher at 72.89 per pound. Had been as high, though, as 73.92. So it has given up a full penny off of its earlier highs. We'll come back and talk more with Brian Hoops about our livestock trade right after these messages. Here and A yet, but... All right, we're back with you, and we're going to take a look at the livestock trade with help from Brian Hoops of Midwest Market Solutions. And he is in Springfield, Missouri, where I understand things have been fairly mild here recently. Brian, probably not a lot of weather impact here on the cattle trade.
Not in our country. 64 degrees and sunshine, so just perfect for January.
When's the last time you had 64 degrees like that in January?
Seems like every year we have it much better conditions here than in Iowa or Minnesota or somewhere.
It comes in fits and starts. Let's put it that way out there in the middle part of the country. All right, let's take a look at the futures trade on the cattle, the live cattle and feeder cattle, also going in fits and starts today. Started out weaker, and then it turned around in a big way. We have February live cattle now up $1.42 at 123.35. April up $1.35 now at 125.35. Big time turnaround here on the the feeder cattle side. Even bigger turns to the upside. We have March feeders now up $1.45 at 144.28. That's $2.28 off our earlier low. And on the lean hog trade, let's go ahead and take a look at that nearby February, which is still down 30 at 61.65. April down 47 at 66.28. The feeder cattle will get the gold star for the biggest turnaround to the upside today, and this is after they made reversals last week. What does that mean? Are we back to neutral now?
Well, yeah, you look at some of the chart action here, pretty positive for the cattle market. Had a reversal, like you mentioned, last Monday. and that set the tone as a lower trade throughout the rest of the week. We completed about a 38% correction in the Fed cattle market with Friday and then following through in today's trade. And once that market held, found some footing, buying interest really came into the market. We have an outside day higher in the live cattle right now. The feeder cattle also seeing an outside day reversal. So some positive technical action. The market was in need of some positive technicals after a day last week where you had 4 trading sessions where you opened basically on the high and then sold off each of the successive trading sessions.
All right. Well, Brian, again, thanks for all the help in helping us get things started here this year on the first full trading week of 2019. With a look at our grain and livestock trade, Brian Hoops is with Midwest Market Solutions.